Okay, good evening, everyone. My name is Aishna, the assistant editor at CA Club India, and I welcome you all to today's webinar. So today we will be discussing about Ind AS 116, which is presentation of leases in cash flow statements. And for that, we have with us CA Sumit Sharda. Sir has been teaching Indian accounting standards and IFRS to CAs since September 2011, and he has taught in various cities across the country. He has also implemented Ind AS for various listed companies and has also been providing consultancy on the same. Also, Sir has an exclusive certification course with us on AS and Ind AS. I'll be putting that link in the chat box. So if any one of you is interested in the course, you can check out the link in the chat box. Before handing over the session to Sir, I would like to quickly state that this is a speaker session, which will be followed by a Q&A session. So if you have any doubts regarding the topic in hand, do put it in the chat box and Sir will be answering the same. Over to you, Sir, now.
Okay, I hope everyone is able to listen to me.
Yes, sir, you're audible.
I hope the sound is clear now.
Yes, the sound is clear.
So today's session is basically on Indian Accounting Standard 116, not exactly how lease accounting is done, but it is rather on the presentation of leases in cash flow statement. Lots of people have doubt on whatever we are presenting, like the income or the expense that the lessee shows, or maybe the income that the lessor is showing, are somewhat notional. What the lessee is paying is considered as repayment of loan, and what lessor is receiving is considered as receipt of loans and advances. So where should the following things be presented in cash flow statement is generally a very big doubt lots of people have, because we also have an asset named right to use asset, which is shown under property, plant and equipment. So is that an investing activity? Is what we are paying financial activity, or we have to consider it under operating activity? So from various aspects we'll be discussing the same. Anyone having any doubt can definitely message. I'll be keeping my check on the chat box. So whenever anyone has any doubt, you can definitely tell me. So now we are going to see the cash flow from 4 points. One is from the point of view of lessee. Another from the point of view of lessor, if the lease is finance lease for lessor. Then from the point of view of lessor, if lessor is manufacturer or maybe dealer of those goods, means he is giving on lease his inventory. Okay. So in that case, if it is finance lease, and if lessor is operating lease. So we have to check cash flow from 4 points, and these are the 4 points we'll be discussing. So let's consider an example for our understanding. I have made an example that suppose the lease rent is 1 lakh rupees per annum. Okay, 1 lakh rupees per annum payable at the end of each year, and duration is 8 years. The asset that has been taken on lease has a discount rate. See, every asset has its own discount rate. Like suppose you want to buy a car, so rate of interest will be 8 to 9%. Whereas if you want to take a house, so the rate of interest provided by bank is generally 6 to 7%, right? So that is where the difference, that is the difference we are talking about. So in that case, this particular case, the discount rate varies from asset to asset. So considering the same to be 8% for our example, and initial there's some transaction costs incurred by lessee, and then later when we talk about lessor, it is 50,000 rupees. Okay, so this is something that is incurred initially at the point at inception when the lease agreement took place, and all other 1 lakh rupees payment or receipt as the case may be will be at the end of each year. Okay. Now from lessee's point, I'll be telling you first what will be the presentation. Now what lessee does is, irrespective of the fact, we don't check whether it is finance lease or operating lease. The new standard Ind AS 116 tells you that what you have to do is whatever lease rent you are going to get, 1 lakh for the next 5 years, discount it at 8%. Whatever lease rent you are going to get, 1 lakh rupees for the next 5 years, discount it at the rate of 8%. So overall, if we see, the discounted amount is 3,99,270 That is what I have calculated using annuity factor 3,99,271. So this is what the lessee is going to show as liability in his books, lease liability. The debit that he does is right to use asset, which is shown under the head either property, plant or equipment, or you show it separately. Okay, the both options are open. You can present it inside property, plant or equipment, or show it separately in the balance sheet. But the accounting treatment, subsequent accounting treatment of this right to use asset, how you have to depreciate it, whether you can use cost model or evaluation model, it is governed by Ind AS 16. Remember that. For tangible assets, intangible assets Ind AS 38, investment property Ind AS 40, as the case may be. So debit is done to right to use asset, credit is done to lease liability. Okay. Now, right to use asset will also include any transaction cost incurred earlier. Any transaction cost that you incur. So 50,000 is the transaction cost. This 50,000 will also be included in right to use asset. So if I tell you the journal entry will be right to use asset debit 4,49,271 to lease liability 3,99,271 to cash. You have paid the initial transaction cost 50,000 rupees. So that is what the journal entry is going to be. Okay. Now, how is subsequent accounting of this lease liability done? For this lease liability, opening shown is 3,99,271. Okay, that is how we start. That is where we started. Now, at the end of each year, interest will accrue at 8%. 8% is the rate at which you had discounted the lease rent earlier. Okay, initially you had discounted the lease rent at 8%. So if we take 8% of 3,99,271, it comes out to be 3,194. Okay, this is interest expense for lessee. Interest expense. What he does is interest expense debit to lease liability. What he is going to pay 1 lakh rupees will be considered as repayment of this lease liability. Repayment. Now, how will the entry be done? It will be lease liability debit to cash. Okay, for 1 lakh rupees. So if we see of the 1 lakh rupees paid, 31942 is the interest that he has paid. Generally, a rule in finance is that whenever any payment is done, first it is towards interest. So when 1 lakh rupees is paid, 31942 is considered as payment towards interest. And the balance amount, so if you subtract both of them, the balance amount is considered as repayment of loan 68058. So now we have a closing balance of 331213. I hope it is clear. Anyone having any doubt can let me know. We'll move towards cash flow statement. I'm giving you an initial hint. So I have shown you for the next 5 years what is going to happen. We have I have tabulated it for the next 5 years how lease liability will be accounted, what is the interest amount for every year, and what will be the repayment of principal every year. So every year principal will be considered as deduction from interest. Anyone having any doubt till this point may ask me. Okay, the chat box is open in front of me. Now, regarding this right to use asset, it will be depreciated over the 5 years. It could be straight line, it could be WDV, depending on the nature of the asset. So if the asset is giving you consistent performance every year, which is generally the case, then it is considered to be for the next 5 years depreciated straight line basis. And if the asset is going to give reducing performance every year, inconsistent performance, then we use WDV method, written down value method is used. Okay, so a right to use asset will be depreciated for the next 5 years. For keeping it simple, right now I have considered straight line method. So we are dividing it over the 5 years under straight line method. 4,49,271 divided by 5. Okay. Now what happens? This depreciation goes to PL. This interest amount goes to PL. The closing balance is something that is shown in the balance sheet, and also right to use asset remaining amount is shown in the balance sheet. How will the same be presented? Let's look over here. We had 4,49,271 appearing as right to use asset. 4,49,271. If we divide it by 5, depreciation is 89854. This will also appear in your PL, profit or loss statement, 89854. Okay. Now, the remaining balance will appear in under the head non-current assets. Non-current assets, either in the name of property, plant and equipment, or it will be shown separately. Either thing is fine. Either disclosure is fine. Either you show it separately or under the head of property, plant and equipment. So 359,417 is after reducing the depreciation. You may cross check the same. Now let's talk about lease liability. We have this remaining lease liability 3,31,213. Some part of it is current, some part of it is non-current. some part will be considered to be current liability, some part will be considered to be non-current liability. Something that will be repaid in the next 12 months, we know that we are going to repay in the remaining 12 months is considered to be current. So if we look at the table, we know next year we are going to pay 73503. So this part is considered to be current and remaining part is considered to be non-current. So if you add both of them, the total is 3,31,213. If we add both of them, the total is 3,31,213. We know that within 12 months, 73,503 will be paid from reporting date. That part is considered to be current and remaining is considered to be non-current. So that is what we have presented, non-current liability and current liability under the head lease liabilities. Okay. Under PL, we have this finance cost, interest cost, and then we have depreciation. So there are two expenses that will be presented under profit or loss statement. Okay. Now starting with cash flow statement, indirect method. As we know, non-cash expenses are added back in while preparing cash flow statement. So depreciation is always added back. We can see it over here. Okay. So depreciation will be added back. It's a non-cash expense. Now, what about interest expense? Now, interest is like it is being paid on loan. Basically, what the standard is trying to tell you is that under finance lease, the asset has been taken over by you for certain period of time against which payment will be paid over the period. So, which means asset is taken on loan and you have not paid the whole amount, it is taken on loan. So, you are going to repay the other person. Okay. So, interest is basically for repayment of loan, not related to the asset. Don't consider that it is interest related to the asset. Consider it as interest expense for repayment of loan. Okay. And loans are something that are shown under the head financial activity, right? We show it under the head financial activity. So that is where we are going to show it over here itself. So interest will be added back. We are going to add back interest. Okay. And then we will show it later on under the head financial activity. Okay. Now cash flow statement will present all payments that are done in cash, all payments. So if we look at the original part, we know that what has been paid during the year is 1 lakh cash rent and this 50,000 rupees. So total what we have paid is 1,50,000 and this is what should reflect in cash flow statement. The total payment made by us is 1,50,000 and this is what should be reflected in the cash flow statement. That is what is necessary. Okay. So if we look over here, 1 lakh rupees is the total lease liability that we have repaid. Out of that 31,000 rupees 942 is interest expense and remaining 68,508 paid during the year, as can be seen in the table also. 68,505, I think I have, this is 68,058. Okay, 68,058. So this part is considered to be financial activity, repayment of loan, financial activity deducted under the head financial activity. Okay. Similarly, interest expense is shown under the head financial activity, and the 50,000 paid is for right to use asset, and right to use asset is having same nature as property, plant and equipment, as I told you. Okay, property, plant and equipment. That is why this is considered under the head investment activity and shown as payment. Okay, this is outflow. This is outflow 50,000 rupees. So the negative and positive signs are something that I have shown on the left part. Okay. So what happens under operating activity? Depreciation is added back, interest expense is added back, investment activity, any initial transaction cost is deducted. For subsequent years, second year, third year, fourth year, fifth year, we are not going to see anything under investment activity. Nothing will be reflected under investing activity, but financial activity will be reflected in same pattern. So both these expenses that we can see, this column of principal and this column of interest, both of them will be reflected under the head financial activity. I hope it is clear. Everyone is able to understand this. Okay, so this is from lessee's point. Anyone having any doubt, you may ask. This is from lessee's point. I'm done with lessee. I'll be moving ahead with lessor. Anyone having any doubt till this particular point? Please, you may send on chat box. Now, in case of lessor, things are a bit different. Okay. Now, assuming that for Lessor it is finance lease, Lessor is not a manufacturer, Lessor is not a dealer. Okay. And he has also incurred this transaction cost of 50,000 rupees. Now, how is he going to account for the same? Now, he has to do two things. Okay. First, considering the present value of 1 lakh at the discount rate applicable to the asset, 3,99,271. He has also paid a transaction cost of 50,000. Now, even this 50,000 transaction cost will be considered to be a part of lease receivable. Okay, this is considered to be a part of lease receivable and added to lease receivable. So the journal entry that is passed by Lessor is lease receivable debit 4,49,271 to the asset being derecognized 3,99,271 being the present value determined by you, and the amount paid 50,000 rupees cash. So this will be the journal entry made by him. Now, if we consider 8% discount rate, and if we apply that to lease receivable 4,49,271, at the end, the amount will not be zero. If we consider 8%, the amount will not be zero because you have also added a transaction cost of 50,000 rupees over here. Okay, so that is where the difference lies. So now, this transaction cost, because of the addition of transaction cost to lease receivables, we have to recalculate the discount rate. We consider it as implicit rate, okay, implicit rate, or you can consider it as IRR, okay, internal rate of return. So IRR is what we are talking about over here, and that is determined to be 3.67%. 3.67%. Okay. I hope you are able to understand what I am trying to tell you. 3.67% is IRR. How have we calculated it? Trying various discount rate, reducing it from 8 to 7, 6, 5, 4. And ultimately, if we consider 3.67%, we finally get a zero. Okay, if we start from 4,49,271, we end up getting zero. Now the presentation in the books of Lessor. Now he doesn't have asset anymore in his books, so it is not going to appear in his books. He is going to show interest as income in profit or loss statement. So first year interest, if we consider at 3.67% on 4,49,271, it is 16,488. You may calculate it. Okay. What he is getting is 1 lakh rupees. So ultimately, if I reduce 16,488, so the principal portion that he has got back is 83,512, reducing 16,488 from the same. This is something that will appear in balance sheet in the form of lease receivables. So we can see this non-current assets, we have lease receivables. Interest income is something that is appearing under the head other incomes. Okay. Now, since we know that we are going to get 86,577 next year's stable amount within next 12 months, 86,577 is something that will be recovered in the next 12 months. That is, then this 86,577 is considered to be current portion, and the remaining is considered to be non-current portion. I hope it is clear. So if we take the total, same as in case of lease liabilities, the total turns out to be 3,65,759. Okay. Now the story remains the same. Total amount paid is 1,50,000, received is 1 lakh and paid is 50,000. He has received 1 lakh as rent, 50,000 rupees is transaction cost that he has paid. So net 50,000 of receipt should appear in cash flow statement. So how are we going to present the same? We are going to first reduce from operating activity the interest amount, because it is to be shown under the head investment activity now, not financial activity, investment activity for Lessor. Okay. Now, interest income will be added and shown under investment activity. Remaining amount was considered to be receipt of principal, receipt of lease receivables. So that was 83,512 received in current year. Okay, this amount 83,512. Now this 83,512 we have received and we have paid a transaction cost in first year 50,000 rupees, right? Only in first year we have paid this 50,000. So net amount is shown under the head investment activity. Remember, what we are showing over here is investment activity. So lease receivables 83,512 and we have paid 50,000, net 33,512 appears under the head investment activity. Anyone having any doubt till this particular point may ask the same. Anyone having any doubt? Now moving towards lessor being either manufacturer or maybe a dealer. Okay, he may be either a manufacturer or maybe he is a dealer. In that case, how will he account for the same? Remember, first point, transaction cost will go to PL. Whatever transaction cost that is incurred will be transferred to profit or loss account. Okay, that's the first step. Nothing is adjusted to lease receivable, it will go to PL. Only in case of manufacturer and dealer. So remember over here what we are doing. We are saying that we have leased our inventory. What we have leased is our inventory. Now, present value of what you are going to get, whatever, present value of whatever you are going to get is considered to be your revenue. Okay, present value of whatever you are going to get, present value of this 1 lakh rupees for the next 5 years is considered to be your revenue. So there are two standards. We are also talking about standard Indian accounting standard 115 revenue recognition. 3,99,271 is the revenue, not other income, revenue recognized by the person. Now, what will he do? He will say lease receivable debit 3,99,271 to revenue. Now the price at which he has purchased the asset, whatever price he has paid to purchase the asset, is considered to be a cost of goods sold. Whatever. So cost of goods sold debit to closing stock. Okay. And transaction cost goes to PL. Other expenses debit to cash. He is going to account for receipts. Same. This is, I have written repayment. This is not repayment. This is receipt. Same as lessee. Same as the table will be same as appearing in the books of lessee. So in balance sheet, we can say 3,31,213 will appear as lease receivable. Now remember, since there's a manufacturer, since he has sold his inventory, since revenue is being recognized, this lease receivable is nothing but debtors. Okay, debtors. Remember that. So now 331,213 will have two bifurcations. Portion that will be current and portion that will be non-current, as we had discussed earlier as well. Now his balance sheet will appear like this, current, non-current. 399,271 will appear as sales. Unlike in previous case, we have not shown any such thing as sales in the previous, lessor not being manufacturer or dealer. Interest income is being shown as 31942 and transaction cost is appearing as expense. So interest is appearing as other income in his books. Okay. Cash flow statement. This interest will be eliminated, right? This interest will be eliminated. Sorry, my mistake. Interest will not be eliminated. Now, remember, this is the case of manufacturer. Let's say you are charging interest to your debtors. You are charging interest to your debtors. Okay. Sometimes it happens that since the debtor is paying late, we are going to charge him interest and he'll pay us interest on the same. So such interest that is charged to our debtors, to our regular course of business activities, they are shown under the head operating activity. They are not investment activity, they are operating activity. So interest received from debtors is considered to be operating activity. So even this interest 31942 will appear as operating activity. So we are not going to do any adjustment for this interest. Since it is appearing under the head operations, sales and profit is included in profits, we are not going to do any adjustment to this interest. 31942 will not be adjusted. So if we look at cash flow statement, there is only one thing: change in working capital, like change in debtors, increase trade receivables, change in trade receivables. The trade receivables from 399,271 to 311,243, there is a change in trade receivables and the change amount is 6805. We have received this amount, right? So 68508 is the only thing that will appear in your cash flow statement. So what about interest? Interest is already included in this profit. So now I don't have to add back interest again or reduce interest now. Okay. So everything appears only under the head operating activity. Nothing appears under investment activity. Nothing appears under financial activity. Everything only under the head operating activity. I hope it is clear. Anyone having any doubt till this point? So there are three phases that we have covered. From lessee's point, we have two things: adjustments in operating activity and then financial activities. From lessor, there are 2 points. One, appearing adjustments related to interest on operating activity, and whatever we are receiving, investment activity, transaction cost, investment activity. From manufacturer and dealer's point of view, if we see, everything appears under operating activity. Change in trade receivables, operating activity. Interest, no adjustments. Depreciation, there is not the case. Anyone has anything to ask? Okay. Now moving towards the last phase, what if it is operating lease? So operating lease is you have some property, plant and equipment that has been given on lease and it is operating lease. That means asset continues to be to appear in the books of lessor. Asset continues to appear in the books of lessor. Now we have rental income that he is going to get 5 lakh rupees over the next 5 years, 1 lakh for the next 5 years. How this lease income is shown in the books? India's 116 says that if you have incurred any cost initially, adjust it to the rental income. So now your rental income becomes 4,50,000. What I'm going to get is 5 lakh. I've already paid 50,000. So 4,50,000. Recognize this income over the next 5 years. Recognize this income on straight line basis over the next 5 years because asset is going to give you consistent performance for the next 5 years. Okay. Now there is a doubt. What is operating lease? Now see, there are two types of leases from lessor's point of view. If asset's major economic life is going to be used by lessee, okay, or maybe what lessee is going to pay you, the present value of that, whatever lessee is going to pay you, present value is almost equivalent to, now what do I mean by almost? 90% or more, almost equal to fair value of the asset, almost, then it is considered to be finance lease, because lessee is going to use the major economic life or the lessee has almost paid you the fair value of the asset, then it is considered to be finance lease. If that is not the case, we consider it to be operating lease. In finance lease, lessor de-recognizes the asset and only recognizes lease receivable, whatever that he is going to get. In operating lease, he does not de-recognize the asset and there is nothing called as lease receivable. Whatever he is going to get is straight line, and income on straight line basis is recognized over the lease period, assuming asset is going to give consistent performance to the lessee. Okay, I hope it is clear. So now the rental income that will be shown, since 50,000 is transaction cost incurred outflow, and what he is going to get is 5 lakh rupees over the next 5 years inflow. 5 lakh minus 50,000, 4 lakh 50,000 is considered to be income for the next 5 years. This 4 lakh 50,000 is straight line. That means we are going to recognize income of 90,000 every year. 90,000 every year. Now remember, initially you have incurred 50,000 as cost. So what you will do is you will consider it as deferred expense debit to cash 50,000. Okay. Now, when you will get 1 lakh rupees, you will consider cash debit 1 lakh to rental income. We are going to only show 90,000 as rental income. And this is the point at which deferred expense 10,000 rupees will be adjusted. The deferred 50,000 rupees will be adjusted in this pattern, and only rental income of 90,000 rupees will appear in your balance sheet, in your profit or loss statement. Okay, so that is what I have shown, profit or loss statement 90,000. This deferred expense will be reflected in other non-current assets. This is non-current in nature. And why do we call it non-current? Because this is something that will never be realized, okay, or consumed. So that is why this does not fall within the definition of current assets. It goes under the head other non-current assets, uh, non-financial nature. 40,000 will remain there. Every year 10,000 rupees will be adjusted against this amount. So there is a concept of straight lining only in operating lease. In case of operating lease, income is always straight lined, and that is how it is shown. I hope it is clear. This is the balance sheet presentation. Now what we have received is 1 lakh and what we have paid is 50,000. What we have received is 1 lakh and what we have paid is 50,000 rupees. So how do we show the same? Lease income is first adjusted under operating activity, 90,000 rupees, we less it. And under investing activity, we will show we have received 1 lakh, but we had incurred 50,000 as transaction cost. Only 50,000 will be reflected under the head investment activity as lease rent. So this is the case in case for operating lease. Now I have not shown the asset. If there was any asset appearing in the books, even that asset would have been considered. Depreciation on the asset would have been considered, and that depreciation would have been shown over here. The asset will appear in the books as property, plant and equipment. There would have been some depreciation expense that would have been charged on profit or loss statement. In cash flow statement, non-cash activities, depreciation will be added back. So this is something further that we need to consider for operating lease, all other things remaining the same. I hope it is clear. So this is what cash flow statement presentation for Ind AS 116 is all about. Okay. Anyone having any questions related to the same may ask. I am done with my session. This is what I had to cover. Anyone having anything to ask? I'm done with the session as well. How do we came to know difference between finance and operating lease? See, what happens is, if when we take, what we do is over here, suppose, let me give you this example. Initially, we had determined this present value to be 3,99,000 rupees, right? Over here. Let me rub this. 3,99,271, right? Now, suppose the asset that has been taken over here has a fair value of 4,50,000 rupees, right? 4,50,000 rupees. So let's compare this 3,99,271, 3,99,271 with this 4,50,000 rupees. It is 88.7%, almost equal to 90%. So I'll say this is finance lease. Now, whether it is finance or operating is only checked from lessor's point of view, not lessee's point of view. Okay, we only check it from lessor's point of view. But suppose the asset has a fair value 5,50,000 rupees. So if I compare 5,50,000 rupees, so it is 3,99,271 divided by 5,50,000, making it 72%. So which is very less. It is not considered to be finance lease. Then it will be considered to be operating lease. This is one of the methods how you can determine. Another method of determining the same is, suppose this asset has a life of 5 years and the asset has been given on lease for 5 years, so it is finance lease. But if the asset has a life of 10 years, you have given the asset for lease for 5 years, then it is considered to be operating lease. So this is one of the techniques. So there are various techniques. I have discussed two techniques which are majorly easy to understand or calculate or determine. Okay, I hope this answers your question. Okay, any other doubts, any other queries, anyone having? So I'll stop sharing my screen and thank you for the session.
So we have another question on major difference between Ind AS 116 and AS 19. Okay, so we have come towards an end of the session. We have one more question from Aina K. That is major difference between Ind AS 116 and AS 19. So sir, if you can share your screen again, or if you can unmute yourself and explain the difference. Okay, so I think there is some issue with Sir's screen. Okay.
Okay, I hope I am audible.
Yes, sir. Just the voice is
Okay.
echoing a little bit.
Let
Otherwise,
me
you're
just
audible.
share the screen. Okay. So there is this difference that is being asked. Difference between Ind AS 116 and AS 19. See, if we look at accounting standard, it says that you have to check finance lease and operating lease from point of view of both the people, like from lessee also and for lessor also. You have to check whether it is finance lease or operating lease. But when we talk about Indian accounting standard, it says that we have to check finance lease or operating lease from lessor's point of view only. For lessee, it will always be considered to have same accounting treatment as we have in finance lease. There is only one accounting treatment, single accounting treatment, as we have discussed over here for lessee under Ind AS 116. For lessor, we have to check whether it is finance lease or operating lease. But in case of accounting standards, we have to check whether it is operating or finance for both lessor and lessee. I hope that clears your doubt. Okay.
Okay, so we have come towards the end of the session. Vaibhav is asking if we can get the recording of the session. So this entire session is also available on CA Club India's YouTube page. So you can go anytime and see the session again. And if you have any other questions, you can also put it in the comment section of the YouTube video only. So thank you so much, sir, for the incredible session. And if you wish to join our WhatsApp group for more such sessions, then I'm also putting the link in the chat box, and you can join our WhatsApp or Telegram group for more such sessions. Thank you.